You have multiplied your money many times through equity.
My first salary was 3,200 per month. Basically, I had invested that 2008. That time it was a 5,000. Yeah, but now if you see, it is like 45,000. So it became 9 times.
40-50% of the people who were doing SIPs, they discontinued that.
People are like, no, let me invest and then I'll make a quick money. There's nothing like quick money.
So which was your the biggest return was?
I'll say Oracle iFlex Solution. The value of that stock is around 130 something. Now the value of that is around 7,000 something. Many of my colleagues had also got the ESOPs, but
They sold.
yeah, so it was offered at 530 at that point of time. When it reached 1100, many people had sold it off, but I hold it on to it. That is one of the biggest Blockbuster stock.
What would be the step-by-step procedure? Hold these stocks for such a long period of time, and then question comes, which is the most important, when to exit.
You have to decide 2 or 3 strategies.
I think you made a huge amount of wealth.
Let me tell you, I am not there yet. Okay,
But still, everybody is not there yet when you actually achieve it.
I'm a very small person living in a very small place. Now I also have a car which is like 10, 12 years old, okay, and running it Honda Mobility.
As a parent also, so you have done a beautiful job of parenting. Generally what happens is parents are putting so much pressure on these kids that's why this suicide and everything is happening.
We have never put pressure on kid to do perform well.
ये आईआईटी करेगा बस नहीं करेगा नजात।
Can you tell me, sir, a bit about your background, like in which stream you graduated in? Where do you come from?
Sure, definitely. See, I am coming from a small town called Rajkot in Gujarat. Okay, I'm coming from very humble background. We're just, me and my sister were there in the family, and we were just enough. Sufficient to do with. Not very living luxurious life in my childhood. And and that is it. My father was advocate, and I did my graduation in the computer science from the Ahmedabad LD College of Engineering.
In which year, sir?
In 95.
95.
95, yeah.
Okay. So what was your first salary?
My first salary was 3,200 per month. And after deduction, I used to get 2,900. They used to deduct 200, 250 something for accommodation and food and all those things. So just 2,900 was my first salary.
Understood. So I was going through your profile, sir, and what I observed is, you have multiplied your money many times through equity.
Some of the stocks where I had invested, I'll give you some examples, say for example, Page Industries, okay, which is like Jockey, okay.
I think the guys were coming from Philippines to India, or the Page industry.
Yeah, Page. So basically, I had invested that in 2008-9, and that time it was a 5,000. So at that time, the stock used to be like 5,000 is too much of a stock, okay, value of a stock at that point of time. Yeah, but now if you see, it is like reached 45,000, so it became 9 times. So that is one stock, okay, and then there are several other stocks where I had invested at very nominal value, and which has got multiplied to a large extent.
So you worked for how many years?
Actually, I got placed to Tata Chemicals Limited from the campus. So I worked there for a year. After that, I got an opportunity to Oracle Financial Software Services Limited. So I worked there 14 plus years.
Okay.
After that, I got an opportunity to work with Barclays Bank. So I moved to Barclays Bank in Mumbai for a couple of years.
Okay.
And after that, I actually moved to Polaris Software for almost 8 years. And after that, I recently joined 3 years back. I joined with CRISIL. So I'm with CRISIL since 3 years.
Understood. So can you give few examples of that, like when you invested or you got ESOPs, etc.?
Sure. So basically, just to give you a little background also about my investment. Actually, my father used to do some kind of investment in the equity as a part of a IPO. So because I said my father was advocate and he was just earning enough to keep us
Float.
Yeah, floating. Okay. So he used to do this IPO investment, and when it gets listed, he used to just get some money, and that used to help in his overall income. So from that only I had learned when I came to Mumbai, and then my father told that, okay, you keep keep investing into some IPO. So I used to do that, and then I used to, again, the same way I used to earn whatever quick money, the way today many investors are doing it, right? So like some of the stocks which I had invested, those, or rather which I had applied in IPO, those used to remain in my account only. And 96, 97, early 2000, there was no online like trading kind of a features available, right? It was just you had to manually do it, many of the things. So I used to have those kind of IPO shares, and after a time when I used to come back and try to see what is the value, then it used to grow. So I felt good actually that now the value of the stock is growing slowly, and that's where slowly I started accumulating some stocks. And after that, I also, with my reading, with my little bit more inquisitive nature, I started doing the stock selection and started investing into some of the stocks. Okay.
So which was your like the biggest return was?
My blockbuster was actually, I'll say Oracle or iFlex solution. Okay. And that was like ESOP, which were given to me. It was given to us, which actually after split and all those bonus and those, if you consider now the value of that stock is around 130 something. Okay. And now the value of that is around 7,000 something. Okay. So it had reached to 12,000 at one point of time, 3 months back. But now, with all stock corrections, it has come down. But yeah, that is one of the biggest, I'll say, blockbuster stock, which I managed to get it and retain it. So many of my colleagues now had also got the ESOPs, but
They sold.
yeah, so it was offered at 530 at that point of time. When it reached 800 or 1100, many people had sold it off.
Right.
Okay, so but I hold it on to it. Obviously, I sold also some part of it, maybe 30, 40, 50%, and I obviously made some money out of it. But yeah, that's for the story about it.
Okay, sir. So I want to understand these playbooks. Let's start with individual stocks. Let's take one company example. Let's talk about Page Industries, let's say.
Yeah.
So what would be the like step-by-step procedure a person could do to identify these stocks and most importantly, actually hold these stocks for such a long period of time?
If you want to do it on your individual capacity, okay.
Right.
And obviously, the objective is to grow your money, right, or to grow your wealth.
Right.
So then you have to invest little bit amount of time. Okay, I'm not saying that daily you have to spend an hour, 2 hour kind of a thing, but at least you spend not couple of hours, but I'll say that you spend at least 10, 15 minutes now on some kind of a homework. Okay, so when I say homework, it is normally my homework is just reading newspaper. Okay, nothing else. So I don't watch any news channel also. I don't want any this business channel also. We don't have connection only, and rather we don't see only.
Okay.
I just read a pure newspaper, business newspaper, and I just try to connect the dots basically. Okay, so I read the news, and obviously in business newspaper there will be always some news related to companies will also come, right? They publish the results into newspaper. So let's take example of say BATA. Okay, BATA Limited, right? We know everyone knows BATA. So if you see all the while that now many of us, or rather I say the common people, okay, like us, okay, will be buying some one or other shoes from BATA, right? All the time you keep hearing that, right? Now other side, you try to see what is the results which they're publishing it, right? Now in the results, if you see, they might show that, okay, there is a growth of say 15% or 20% compared to previous quarter or previous year's result. Okay, in terms of revenue, then you see the profit also, whether it is also growing the same proportion or not. So when 15% growth will happen, then obviously share price will also go up by maybe not that much, but at least 10% or maybe 12%, right? So that is how you have to connect the dots. At one side, you see what is the consumption happening for the company. You try to read the news and then you try to also see the results. Okay, so that's how you can do it. So once you have narrowed down in the company, then you go and check some of the things on the net. Okay, nowadays a lot of tools are available, but you go to any of those tools and try to figure it out, then you will able to see that whether this company results for whatever past many quarters. Okay, so that will give you an idea that whether the growth is happening or not. Okay, so that gives you confidence. That will basically revalidate your understanding. Actually, you might make a mistake, okay, no doubt about that, but that mistake will give you an idea that, okay, where you have made a mistake.
Got it.
Yeah.
So this is the approach is similar to, I think, Peter Lynch book, One Upon the Wall Street. So what he says is just see around you like which products are being sold.
Oh.
So once you know, ki, okay, let's say in your case it was BATA, ki everybody is buying BATA shoe. So let's dive into the company.
Right.
Okay, what is the revenue? What is the profit growth?
Cool.
And if it is actually increasing, it is showing in the numbers. So I think these steps seem simple. I think a person can do it, but I think the difficult part is like what percentage of allocation should be done in this. Because sometimes what happens is a company becomes a multi-bagger, but then we have just invested 0.5% of the portfolio and portfolio has not moved.
Right.
Or sometimes when we have invested 10-20%, then that particular company goes down. So like portfolio allocation is like the biggest thing to crack. So how you think about it?
It all depends on your age, your risk appetite, and your, I'll say, surplus availability. Okay. Say, for example, guy is earning 50,000, okay, and he's spending 30,000 on his basic necessities like food, accommodation, clothes, basic thing, commuting, right?
Right.
So, say 20,000 is his surplus in his hand. Okay. Now, assuming that now guy is having a high risk appetite. So when I say high risk appetite, it means that now person is not losing his sleep when stock or market goes down. Okay. And the low risk appetite is whereby now person is losing the sleep if even stock, market or sector goes down, right?
Right.
So if you are, say, for example, if you're having a high risk appetite, then out of 20,000 surplus, maybe you want to pick up 15,000 or maybe 12,000, okay? And you can invest that in stock. And remaining 8,000, you can keep it as your surplus, okay? Surplus in the sense you leave it in your hand because you might need some unexpected expenses. You can invest that much in the equity.
Okay.
Okay. Now, when you say equity, you can invest in the large cap. Large cap means basically a very stable companies which keeps growing year over year. Okay, so you can check with whatever in the newspaper on some of the website, but you can just pick up some of the good companies, maybe like L&T or maybe State Bank or whatever, right? So I'm not an advisor, but I'm just giving you an example. Okay, so you invest whatever, no, a couple of stocks or 2-3 stocks and try to invest, spread your whatever, no, 2,000, 3,000 rupees in each stock and try to buy some stock every month. Okay, either you can invest maybe one stock every month or you buy, I'll say two, three stock. Maybe you can even buy the one stock, one share also, right? So you can buy 2-3 companies depending on your funds availability and buy something. So basically that's how one should start. Okay.
Okay.
And this can go on for, I'll say, initial few years. Okay. Like, you try to do that for some time. And then maybe you should see some amount of a go. So now once you invest in the stock, now what happens is that now if you open the newspaper, you'll be able to see the news related to those companies where you invested. Okay, so that is a mentality that now wherever your interests are there, you will start seeing the something related to that. So that is how one should start if his person is having a good risk appetite. If you're not having risk appetite, then better go and find out some of the mutual fund which is giving a good return, and then you invest on this mutual fund as a SIP. Right, and you again over there also you can just figure it out that now what are the good mutual funds available in the market. I mean, and try to pick up whatever is giving a good returns across the duration. Okay, so for example, say if you're picking something like a flexi cap mutual fund, okay, so then you should just go to some website, figure it out what are the flexi cap mutual funds available in the market. You figure out from these mutual funds which mutual fund is giving consistent return, high return in 3 months, 6 months, 1 year, 3 year, 5 year, okay, kind of a thing. So you try to analyze that way. It is not very rocket science. You can just figure it out from the table which maybe this website might be displaying it, and you figure it out which one is which is giving a good return consistently, and pick up that mutual fund. Okay, and then invest, do the SIP in those mutual funds. So that is how one should start doing the investment into the equity or mutual fund, depending on his risk appetite, depending on the funds availability, surplus which is available, or maybe any other liabilities which he or she might be having.
Now question comes, which is the most important, when to exit? Because now sometimes like recently, if we talk about the recent fall,
Yeah.
and according to one of the report, I think 40-50% of the people who were doing SIPs, they discontinued that, which is the opposite of what we would have done.
Yeah, right, correct. So I think one mistake which many people does is that now when market is growing, people are like, no, let me invest and then I'll make a quick money. Okay, so let me tell you, there is nothing like quick money. Okay, it is going to take time. Anything is going to take time. So when market particularly goes down, in fact, you should invest more. You should try to maybe buy something in a lump sum manner. Okay. That rather than whatever now 2,000, 3,000 SIP is going on, maybe you just invest 10,000, buy some of the good mutual fund or stock at that point of time. Okay, so that helps overall in the long term. Now, regarding exit particularly, I'll say that, see, normally you have to decide one strategy, two or three strategy. Okay, one is that whether you want to exit when you achieved your goal. Like you say, for example, you say, I want to maybe make 20% every year or 30% every year or what, or 2 years, right? Then you exit when you have achieved that goal. So that is first strategy which one can adopt. Okay. Second is that, as like you said, Warren Buffett had said, I mean, now that you become greedy when others are scared, and you become scared when others are greedy, right? So when market is going up, not to very abnormally, okay, where sudden growth is there. If you read in newspaper that now a lot of froth is there, kind of a thing. If you feel so, then you exit some of the stock. Okay, so that is second strategy. Third is that, see, what I do sometimes is that if I invested in an equity or stock, if that doubles, okay, then I just take out half of it. Okay, so if I invested, say, 100 rupees, now the stock price has become 200 rupees.
You will
Okay.
take 100 back.
Yeah, so I'll take 100. Means what I'll do is that I'd invested, say, 500 shares. Okay, so what I'll do is that I'll sell off 250 shares now at 200. So my capital is back. Okay, my capital is free now. Now, whatever is there is my only profit.
Right.
Right. So that is a third strategy whereby you either take out 50% or maybe 30%, whatever you're comfortable, you try to do that way and you keep the remaining stock. So again, it is a averaging out the profit also. Okay, so that is maybe third strategy. Fourth strategy is obviously, I mean, like now, if you need money and you need to exit it, you will exit it, right? So that is, I mean, you need money and you already invested, and wherever it is, whether it's a 5% growth, 10% growth, or maybe 20% downward growth, okay? But you need money, and then obviously that's where you will just take out the money. So this is again another strategy. So these are some of the things which you can do. That now, for whatever reason you want to buy a house, okay, then you will just exit the stock and maybe put it into the house, or maybe you want to buy a car, then you will do it that way, right? So there are different things which are there. Again, depending on what suits you, you can do it, and then accordingly, it may help you. Yeah.
Understood. Then let's talk about the second theme using which you made money, which was ESOPs. How you were able to hold the ESOPs and how you knew ki this particular the value of the shares will increase. Because what I've seen is few of my friends who are offered shares, ESOPs in some startups, they say कि यार यहाँ पे तो मत लो जहाँ पे कोई फाउंडर बहुत तुम्हें जबरदस्ती दे रहा है शेयर्स, तो उसके वैल्यू तुम्हें पता है कि नहीं इंक्रीज होने वाली. So don't buy these, don't take these. So what is your mindset?
Again, see, you have to do a little bit introspection, and maybe you have to look around, okay? So whatever company is there, first of all, whether the growth is there in the company or not, okay? So if you are in the company, very simple thing which you need to find out is whether the employee strength is growing or not. Okay, so in a startup you might have joined, you are just there as a 50 people or 100 people, right? Now you just try to see that whether every quarter, every year, whether the company is growing in terms of the employees or not. Okay, so that is very simple indicator that company is growing or not. So if company is growing from that perspective, then there is some growth which is there. Second, if you are in the company, then when you listen to what are your leaders, then you will get some idea that what is a growth plan, growth strategy plan, whether the slowdown is going to impact them or not. So they will hear from the actually horse mouth, okay, when you are in the company. So that is second thing. Third is that obviously, as I mentioned earlier, you look around, okay, whether what are the other companies in the same sector, okay, and how is their growth happening in that same sector, right? Say for example, if you are in the hotel industry, okay, and there is a, say for example, this hotel startup is there, and they are offering a stock option, you just figure it out whether the new hotels are coming up or not, okay,
Right.
and whether hotel occupancy is growing or not, okay. So that is a simple indicator. So that will give you an idea that yeah, hotel industry is growing only. So obviously, if you are in that hotel company or hotel industry company or hospitality company, that is also going to grow. Okay, so that is a third indicator, and obviously, fourth indicator is that now whether do you see any risk in the company or not? Okay, so sometimes some companies gets into a sort of a governance issues. Okay, while the company might be good, okay, it might be growing also, but if there are any kind of a governance issues are there, right, then one needs to take care of it. Say for example, we know, like now at one point of time, like I recently, yesterday before yesterday only, I was reading about Jet Airways, right? So Jet Airways at one point of time was a leader in the Indian aviation industry, right? And they were having undisputable 60 70 maybe percent 80% share, right, in the industry. But still, you see, I mean, that has gone bankrupt and gone down, right? So why? Because there were some kind of a governance issue. That is what I read in the newspaper. Okay, I don't know, to be very honest, what happened actually, but I read in newspaper. So if you notice this kind of a governance issue, then you'll be able to figure it out whether the company is going to go down. Right now, you might see, okay, the prices are going up only, but if governance issues are there, then it is not today, but tomorrow it's going to get unearthed or it's going to be discovered by someone. Okay, by regulatory authorities. So that is fourth thing. So depending on that, one can take a call whether the company is going to grow or not grow, and whether you should retain the ESOP or not. Again, ESOP which is being offered, that also you need to check whether those are being offered at what price. Okay, I mean whether it's at a discounted price or whether it's at a market price. If it is at market price, then there is no point not taking ESOP, right? Then you can buy from the market itself, right? So these are some of the things which you have to understand, you to take care.
Understood.
Yeah.
So let me summarize, sir. So as of now, what we talked about is stocks. So in stocks, first we have to see, just take an educated guess. For example, in case of BATA, you saw ki, okay, people are actually buying BATA shoes. So let's understand about the company. Then you see the profit growth, revenue growth. If that is happening, you go to the past, like 6 months, 1 year, 2 year, 3 year. If it is still growing, then you can actually tell about the near future. Ki, okay, in the next 2-3 quarters, this will particularly make money, and then you invest based on your risk appetite.
Correct.
The second playbook that we understood from you is about the ESOPs. So if you are getting ESOPs from your employer, what we can see is what is the employee growth. So that is a direct correlation with the possibilities or probability of that company doing better. And plus we have to see the governance issue. Ki, okay, the management is good. Now the third most important part is your career. So that way also I think you made a huge amount of wealth. First, I would like to know, out of these three, like individual stocks, ESOPs, and career, like which one factor actually contributed to the maximum wealth that you have? And then we'll talk about how you think about career.
Okay, so first of all, when you say wealth, I mean, it has a different connotation, okay? Right. So, yeah, so let me tell you, I'm not there yet, okay? So,
But still, everybody is not there yet when you actually achieve it.
so I'm not like now Ambani's or Adani's, okay? So those are the wealthy people. I'm not one of those, okay? So let me just tell you, I'm a very small person living in a very small place, and and I'm living frugal life. But overall, I mean, I have from not wealth perspective, but from monetary perspective, I don't have to worry no, about too much about money. Okay, so that is only thing which I can tell you. So because as I said, my parents have come from the very humble background, and I have seen now what is it like to live with a very in a frugal means. Okay, why in a frugal means? So that way I know the value of money. Right. I always ensure that now whenever I'm spending money, that whether I'm getting a real value for money or not. I just don't buy it because of the brand or because now someone will say that, oh wow, you got this and now you are something status.
Because of the status here.
Yeah, so I never believe in those kind of status also. And as of now, I also have a car which is like 10, 12 years old, okay, and running it Honda Mobile, okay. So it's not that I do something for status or something for my this one.
Yeah, I actually wanted to ask you this question because as a parent also, so you have done a beautiful job of parenting. At least your children are in a very good trajectory. So can you brief about like what they are doing, and then what was your thinking model when you were actually, taking care of them?
Sure. So first of all, my elder daughter has done her BTech Computer Science.
Right.
And she is right now with the JP Morgan since 2.5 years now. And she has recently only got promoted, and I'm really proud of her. the way she is doing her job. My younger son is in IIT Bombay. He is now will be completing second year by this April or May. Okay. Now regarding yeah, I mean you can give whatever praise, but I'll say that 100% credit I give it to my wife. Okay, the way she has nurtured them, the way she has brought them up is amazing, and I cannot be thankful to her no, for that. From parenting perspective, we have never put a pressure on kid to do perform well. Okay, and that is I think everyone should do it. And in fact, I'll also just delve into a little bit of story of about my son also. When we started, because we had seen my daughter's journey in whatever BTech computer science, right? And that's where we had told my son very clearly that you don't have to aspire for any of this thing, and JEE is totally out of scope only. You don't have to work for that, you don't have to take any pressure for that, and we just look for, if you know, in Mumbai there is a common entrance test which is called CET. Okay,
Right.
so we had told that okay, we'll go for only CET oriented exams only. And that's how he started studying it. And then but slowly he said, okay, let me give a try, let me read, and slowly he found it interesting. He said, okay, I'm enjoying it, and maybe I want to appear for JEE exam. He said, I mean, there's no need for it. But he said, no, let me try. I mean, okay, so okay, fine, we will try. And then he appeared for exam, and that's how he cleared it also. And in fact, when he came after his advanced exam, he was a little upset because he couldn't do well as per his expectation. But fine, I mean, we said it doesn't matter. I mean, we are not here for any competition kind of a thing, but you just have to enjoy. That's how we got it, and that's where he also got it into IIT Bombay in the open category. So that was kind of a story which I want to share with you and with your audience also, that when you're doing particular parenting, you just focus on the basics only, and that's what it helps actually.
But sir, like that is a very rare thing, because generally what happens is parents are putting like so much pressure on these kids that that's why this suicide and everything is happening. So from your side, it was like a free mind, an actual mind, very well groomed mind, what I can feel from the story.
I know how I have studied, okay, and I know what kind of education which I got, okay. So from there, if I reached here, obviously you are getting lot more aids, okay, lot more support from your parents. Nah? You will also reach somewhere, okay. So don't have to worry about that. You just enjoy the life, okay. That is a simple motto which you have shared it. And let me tell you that in my both kids' case, okay, during their whatever early schools and all those things, we have never gone for any kind of class, okay, like someone goes and sends them for phonetics class, or someone sends them for abacus class, or some, nothing, absolutely zero, no class we have sent them.
That helps actually for the reflection part.
Right.
Because now, recently I was watching this one video which was telling here nowadays, like, kids have so many classes that they don't have time to reflect on, actually the feedback loop is not there.
Exactly.
That creates a problem. Although in the skill level, like, they are learning a lot of things, but they cannot actually zoom out from that world and actually, maneuver them in a particular direction.
Right. So basically, that's how I think every parent should do it, and to them, yeah. See, and my thing is that if you give too many things to kids, they will not know how to make their ways.
Right.
So I mean, personally, I feel that now you have to live in the scarcity kind of a world. Okay, if you live in the abundance world, then kid will not actually strive for achieving something.
Right.
Okay, so that is one thing which I just want to tell you, that if you give everything to kids on his plate, okay, then he will not actually struggle or strive to maybe on something more.
Okay, so now we can you help us, like, about how you think about career when you were progressing, because you have this beautiful career?
Whatever first few years, whatever you will learn, okay, whatever effort you will put into the whatever company job, that is going to take you a long way. Because as you grow in your career, okay, you will not be able to do as much hands-on as possible, which you would have done in your first few years.
Right.
Okay. So that is where my very sincere advice to all, and I've been telling to all people, is that now get deep into whatever you're doing, okay, and try to have a full understanding as much as possible. Don't shy away from working beyond whatever 9 hours, 10 hours kind of a thing. Okay, so while today's generation doesn't like that kind of a advice at all, I know that, and a lot of ruckus has created in because some leaders have been telling about
Murthy sir statement. So
yeah. So, but I'm not saying that now you put whatever number of hours. Okay, I say that now if you're enjoying work, try to get as much as possible from your job or from your work. Absorb whatever is possible in your initial years,
right.
because that is going to give you an edge down the line.
Hmm.
So that is my request to all the new joiners and junior professionals.
Okay, thank you so much, sir, for coming to the podcast. I hope everybody will love this. Right. Thank you so much.